This is Professor Srikanth from ICFAI Business School, Hyderabad. Today we are going to discuss about account sheets, different types of account sheets which are used in a business and their importance. So, account sheets are used to present the financial information relating to business operations in a systematic manner. Different types of account sheets are prepared to meet various information needs of decision making for a business. Each account sheet records the business transactions of similar nature in sequential manner. As and when a transaction takes place, we record the transactions in account sheets. In account sheets, we enter the business transaction in their original form as and when the transaction takes place. So, now let us see different types of account sheets which are regularly used by any business. So, they are cash book, purchase returns book, sales returns book. Now, let us see cash book. Cash book is a type of account sheet which records all the transactions relating to receipts and payments of cash. So, a business performs different types of transactions in which cash is involved. All such transactions are recorded in a cash book. Cash, the transactions done through bank account are also recorded in the cash book by maintaining a separate column for bank transactions in a cash book. In the present days, we see the transactions are done in online mode by using net banking, UPI payments, etc. Such type of transactions are also recorded in cash book in the bank column. Cash book serves as the primary repository of information relating to cash flows of a business. It is useful in preparing advanced managerial accounting statements like cash flow statement, fund flow statement, and many other statements which require information relating to cash flows. Since the cash book contains the bank transactions also, it is advisable to reconcile the bank column of the cash book with bank statement periodically, so that we can ensure that there are no discrepancies exist between cash book and bank statement. Cash book also helps in minimizing cash embezzlement by the cashiers by always cross-checking the cash balance as per cash book with the actual cash held in the business. So, this is an example of cash book. So, cash book is having two sides. On the left side, we record receipts, and on the right side, we record payments. So, we see the columns in the cash book: date column, particulars, VN stands for voucher number, LF is ledger folio number, and we have two columns for amount, that is cash column and bank column. Same columns you can see on the right side of the cash book also. Now, let us see some transactions which are usually entered in cash book. So, on the right side you see the sales. So, if you are getting cash on sale, you enter that in cash column. If you are getting the payment through online or net banking or through check, you enter that amount in the bank column. So, in this example, you made a sale of 40,000 rupees and you received the amount through check or through online payment. That is why we enter this amount in the bank column on the left side. And we can see some more examples here. So, say for example, Mohit account, here the person has made the payment to us, and he might have made the payment in the form of check, or he has used net banking for giving the money to us. And then one more example we can see, we received money from, so Ravi account is also there on the debit side. So, he has made the cash payment, that is why you can see the amount in the cash column. Then we received commission through check or net banking, that is why we entered this in the bank column on the left side of the cash book. Then we can also see the interest account. So, on the left side you can see different types of expenses like payment of rent. So, you made the rent payment by check, that is why the amount is entered in the bank column. So, you made the electricity bill payment, then you purchased stationery and you paid 500 rupees. So, transportation charges you paid by check, and you made some purchases and you paid cash. And you can also see some examples like, you made the purchase and you paid check. Then you can also see some expenses like interest, advertisement, salaries. So, these are all the typical examples of the transactions which are entered in a cash book. So usually on the receipt side, you can see sales which are made in cash or through check or online transfers, and receipts from different customers and different types of incomes like commission, rent, etc. On the left side, you can see different types of expenses, rent, electricity, stationery, transportation, like the different types of expenses which are paid by a business or recorded on the left side. Apart from these, you can see the purchases which are made and payment made to the suppliers, you can also find on the left side of the cash book. So this is a cash book which is having two columns, so in which we are maintaining the bank details as well as cash details. Now let us move to discuss about the purchase book. So this is also one important account sheet which is regularly maintained by any business. So purchase book is used to record all the credit purchases, like purchase of raw material, purchase of merchandise made by a business. So purchase made on cash basis or recorded in cash book. It means credit purchases are only recorded in the purchase book. So purchase of any long-term assets like furniture, machinery, vehicles used for running the business, they are all the long-term assets. Such assets are not recorded in purchase book. They are recorded in journal proper. So it means purchase book is meant for recording the purchase of raw material and merchandise. So all the credit purchases are recorded in sequential order in the purchase book. As and when a purchase is taking place, you have to record the transactions in the purchase book. So this purchase book is also called as book of original entry, because we are recording the transactions in the first step in the purchase book. All the entries in the purchase book are supported by this document. So the document can be an invoice or bill which is issued by the supplier. So with the support of the document, you have to record the entries in the purchase book in sequential order. The purpose of maintaining purchase book is to know the amount of credit purchases made by a business periodically. If it is a very large business, you can see the balancing of purchase book is done weekly or a fortnight or monthly basis, so that you know what is the total amount of credit purchases made by a business. So the purchase book contains the details like date of purchase, invoice used number, particulars of the supplier, details of the goods sold, and price charged by the supplier. Now let us see an example of purchase book. So this is an example of purchase book which is maintained by a business. So we can see the date column. Here we record the date on which you made the transaction. Then in particulars column, you can see the supplier's name and details of the products you are purchasing. And if you are getting any discount, the discount should also be recorded in the purchase book. And you can also see a column for invoice number. The invoice which we are getting on purchase is also called as inward invoice. Then you can see the ledger folio column, because all these entries in the purchase book should also be reflected in the supplier's ledger. So in which page of the supplier ledger you are posting this transaction, that page number should be written in LF column. Then we have two columns for amount. One is for the calculations like deducting discount or adding any additional charges which are levied by the supplier. Then in the last column we will write the total amount. Now let us see some examples in this purchase book. Say here the business has purchased goods from Janta Electronics, so it is dealing with electronic goods. So 100 ceiling fans are purchased at the rate of 1000 each. Here you are giving the details of the items what you are purchasing, the number of items and the rate at which you are buying the items. Then you also mention the discount if you get. So the discount should be deducted and net amount should be written in the outer column. You can see one more example here. So the goods purchased from ROM Electronics. Here he has purchased 1200 meters of electric cable at the rate of 25 rupees per meter. So by adding packing and forwarding charges, the total amount comes to 30,250 rupees. You can see one more example here. You purchase goods from Ajay Electronics, 150 tube lights at the rate of 250 each, and you also got a discount of 5%. The discount comes to 1,875, that is deducted from the gross amount, and net amount is 35,625. So in this way you are recording all the credit purchases made by you in a chronological order in the purchase book. So the total credit purchases for the month or per week or a fortnight basis, you transfer them to the purchase ledger, and you should also post these transactions in concerned suppliers ledger accounts. Now let us discuss about purchase returns book. Just like purchase book, we are also maintaining purchase returns book, wherein you are recording all the purchase returns you made to your supplier. Usually after purchase of goods, we may find that goods may be defective, or they are damaged in transportation, or the specification of the goods is not as per your requirement, or sometimes you got excess stock. In all those situations, you return your goods to your supplier. So such returns are recorded in purchase returns book. The purchase returns book is maintained to record the transactions from which are returned to the supplier from whom you purchase goods on credit basis. So if you purchase goods earlier on cash basis, such transactions should not be recorded in purchase returns book. They are directly recorded in the cash book. So here in purchase returns book, we are dealing with only the credit purchases which were made earlier, and now you return the goods to your supplier because of any of these reasons. So goods returned to supplier are also called outward returns, because goods are moving out from your business to the supplier. Now let us see the entries which are made in purchase returns book are supported by a debit note. The debit note issued by you to your supplier stating that his account is debited with the value of goods returned to him. The purchase return book shows the details of the date on which you return the goods, to whom you return the goods, debit note number, description of the goods, quantity and value of the goods returned to your supplier. Now let me illustrate a purchase returns book. So in this purchase returns book, we have the columns like this. The first column is date on which you return the goods. Then in the particulars column, you write the supplier name to whom you are returning the goods and details of the goods which are returned. Then in next column, you write debit note number, then ledger folio and the amount. So if you see, the one purchase return is made on 3rd April. So we write the date in the date column, and the return is made to Janta Electronics, so from whom we purchased some electronic items. So here we returned 5 ceiling fans to the supplier, and its price is 950 rupees. So we have a debit note which is issued by us to our supplier, which is acknowledging that his account, Janta Electrical's account, is debited with 470 rupees. So his account balance is reduced by that extent. Now let us see one more example. So you return 50 meters of electric cable to ROM Electronics. So its value is 1,250, and you are issuing a debit note having a number 16. So this debit note acknowledges that ROM account is debited in our ledger with 1,250 rupees. The total purchase returns are 6,000. They are transferred to purchase returns account. And here one more important thing you should remember: Janta Electronics ledger account should also be debited with this amount, and ROM Electronics account should also be debited accordingly. Now let us move to sales book. So just like purchase book, sales book is used to record all the credit sales which are made by a business. On the other hand, the cash sales which are made by you are recorded directly in the cash book. So, sales book deals only with credit sales. Sales book is also called as book of original entry because you are recording the transactions for the first time in the sales book. So, all the sales are recorded in sequential order as and when the transaction takes place. The purpose of preparing sales book is to know the amount of credit sales made by a business periodically. So, if it is a large business, you can ascertain the total credit sales every week or every fortnight or monthly or off yearly. As per your convenience, you calculate the total amount of credit sales in the sales book. Sales book contains the details like date of sales, outward invoice number, particulars of the customer to whom you are making credit sales, details of the goods sold and price charged on the goods. Now let me illustrate sales book. So in this sales book we have the columns like this. One is a date column. Here we write the date on which you are making the credit sales. Then the particulars column, you write the customer's name to whom you are making the sales. You should also write the details of the goods. See, for example, to Ajit Traders, you sold 50 tins of Vanaspati oil at the rate of 1,500 per tin. So these details are mentioned in the particulars column. You should also mention the outward invoice number which is issued at the time of this credit sale. Then LF column is left blank here. Here you should mention the page number of the ledger in which you are writing Ajit Traders account. Then these columns are for the amount we are recording in the sales book with details of the items you are selling and the discount whatever you are giving to your customer. So if you give a discount, you should write the gross amount in the details column along with the discount, and the net amount should be written in the outer column. So the total of the sales book should be transferred to sales ledger. So here in this example, 2,51,750 is the total amount of sales, credit sales which are made in the month of April, and the sales are transferred to sales ledger. And you should also post the concerned suppliers ledgers with their sales details as and when you are making the sales. Now let us move to sales returns book. Sales returns book is maintained to record all the goods written by your customers to you. So when to whom you made the sales on credit basis earlier. It means the cash sales, if you made a cash sale earlier and the customer returned the goods, such sales returns should be recorded directly in the cash book. In sales returns book, we are recording only the sales returns from credit sales. So goods may be returned by the customer due to a variety of reasons like defects, delay in delivery, oversupply, not matching with the specifications mentioned by the supplier, by the customer. Goods returned by the customer also called returns inwards because goods are coming back to your business. The entries in the sales returns book should be supported by a credit note. So credit note is prepared by you and it is issued to your supplier stating that his account is created with the value of the goods written by him. Sales return book shows the details like date of return, name of the customer, credit note number, description of the goods, quantity and value of the goods returned. Now let us see an example of sales returns book. So here in the sales returns book, we write the date in the date column, on the date on which you got the return of the goods from your customer. Then in the particulars column, you write the customer name from whom you got the goods return. So here in this example, you got the goods return from Ajit Traders on 2nd April. The details of the goods are 5 tins of Vanaspati oil which we sold earlier on credit basis to this customer. So here we write the details of the goods, then we write the credit note number which is issued by us to Ajit Traders, which is acknowledging that his account is credited with 7,500 rupees. Now one more example is on 12th April, Ravi Brothers returned 1 bag of tur dal which we sold earlier on credit basis. So we are issuing a credit note to Ravi Brothers, so stating that his account is credited with 2,000 rupees of the sales returns. So here in the April month you got total sales returns of 9,500 rupees. So this total is transferred to sales returns ledger, and also as and when you got the sales returns, the customer's account should also be credited with the value of the goods returned, mentioning the credit note number. So now let us conclude. These are the different types of account sheets which are regularly used by any business. So in this lecture we discussed about cash book, its importance, what are the different types of transactions recorded in cash book, then sales book, what is its purpose and what type of transactions and how they are recorded in the sales book, then sales returns book, how it is recorded and what is the information you can get from sales book, then purchase book and purchase returns book. So these are very regularly used account sheets by any business. Thank you.